Good morning, members of the media and other invited guests. Thank you for joining us this morning and welcome to Sterling Asset Management's 20th anniversary virtual press launch. My name is Tonya Anita Elliott, Vice President Sales and Marketing, and I'm joined this morning by our President and CEO, Charles Ross, Vice President Fixed Income and Foreign Exchange, Eugene Stanley, and Marion Ross, Vice President Trading and Investment. Yeah. According to the U.S. Bureau of Labor Statistics, only 25% of new businesses make it to 15 years or more. So we are very proud to be celebrating this milestone of 20 years in business. Our celebrations will begin this month and continue into early 2022 under the theme, Preserving Our Legacy, Securing Our Future. We'll be celebrating our achievements, our clients, employees, partners, and of course, we'll also be giving back. The media has been an integral part of our 20 years of success. And so we thought, what better way to start our celebrations than by giving you the inside scoop on how we achieved this milestone and a sneak peek at our plans for the coming year and beyond. On your screens now, you should be seeing your agenda for this morning. We ask that you stay all the way to the end of the presentation, as you'll have an opportunity to ask questions after the presentation, and you'll also have a chance to win a gift certificate, an Amazon gift certificate, valued at US $300. So pay very close to the presentation, this morning to increase your odds of winning. All right, so we thought we'd start off this morning before we get into the presentation with a little icebreaker. And we're going to do a fun little poll. Marion, can you confirm that the first question of this poll has popped up on the screen as yet?
Yes, it has.
All right, so right now we want to find out, what were you doing in 2001? On your devices, please select the multiple choice answer that is most relevant to what you were doing in 2001. Were you a toddler? Were you in college? Were you starting your career? Or none of the above? We'll give you a few seconds to answer this question.
They've intentionally disabled it for the hosts, so unfortunately I can't participate.
All right, so hopefully everybody has figured out how to input their answers, and we can move on to the second question. Marion, is the second question showing on the screen?
Not quite yet. I think we just need a few seconds.
Okay.
Yeah. Oh, so interestingly, Tony, and before you get to the second question, we have the poll results for the first question. And most people were actually just starting their career in 2001.
Okay, interesting. All right, so we're going to get on to the second question now. It should be appearing on your screen. And that question will read, do you clearly remember the financial crisis of the 1990s in Jamaica? This one is a simple yes or no. So we ask you to just respond if you clearly remember the financial crisis of the 1990s in Jamaica. Again, we'll give you a few seconds to put in your responses. All right, so I will ask that Marion tell us when she sees the poll results for that second question.
Okay, I see they're being generous with their time. From my perspective, I certainly can't really remember the financial crisis of the 1990s. And I believe that the poll results will be ready in just a few seconds. What about you, Tony Ann? Were you thinking about the financial crisis? Sorry to age.
I was a carefree prep schooler in the 90s. So
okay.
Just about to enter high school, so no knowledge of what was happening.
All right, well, the poll has finished, but the results are not quite up on the screen yet. And actually, it's a 50-50 tie. Some people clearly remember the financial crisis of the 1990s, and half the audience does not.
Okay, well, that is interesting. So for some of you, would have only heard tales of what the Jamaican economy was like in 2001. But for the rest of you, you would have been very familiar with what it looked like and felt like in Jamaica at that time. The reason why that poll was important is not just to have fun, but because sterling actually started in 2001. And this morning we're going to be taking a little trip down memory lane, and we're going to be looking at the history of Jamaica's economic cycle. To recreate the sentiment and data of that time, I will now hand over to our founder and CEO, Charles.
Thank you, Tony-Ann, and welcome everyone again. So, in 2001, Jamaicans were still very wary of the financial markets, and were still really suffering from the effects of the 1990s crisis. A little snapshot of some data. The exchange rate in 2001 was 47.40 Jamaican to 1 US. Inflation was running at 8.5%. A 10-year US government bond was yielding just over 5%. And the Jamaican $30 repo rate was 14.5%. On US dollar Government of Jamaica global bonds, you could earn a yield of 10%. And in 2000, the economy had actually contracted by 2%. Most investments at the time were held in Jamaican dollars, especially fixed income investments. And the most popular product was the 30-day repo. Just to remind us about the financial crisis, several financial institutions disappeared altogether. The government bailed out most of the banks and insurance companies. And of course, many companies defaulted on their loans. So it was a very trying time for the Jamaican financial sector. Now, the focus on the short-term repo rate really led investors to ignore the long-term effects of devaluation and, as we'll see on the next slide, inflation. In 1972, $1 million Jamaican dollars could buy 1.3 million US dollars. But by 2002, $1 million Jamaican could only buy 19,600 US dollars. Quite a dramatic fall. Mm-hmm. And the real reason behind this, of course, was Jamaica's high inflation rate. The next slide, please. The average inflation between 1977 and 2001 in Jamaica was just over 20% per annum. So what that meant was that the purchasing power of $1 million Jamaican dollars in 1977 had fallen to $12,000 in 2001. So you really see there the dramatic effect of inflation eroding the value of our currency and, of course, of our investments. Between 2001 and 2020, the inflation rate declined quite significantly, but it was still significant. It was still substantial at roughly 8.5%. So what that meant was that $1 million Jamaican dollars back when we started in 2001 could only buy the equivalent of about 212,000 Jamaican in 2020. Again, a significant fall. Now, the flip side of the focus on short-term interest rates meant that investors ignored the long-term compounding effect of quite modest interest rates. And this slide indicates what the value of $10,000 US would be after 30 years at three different interest rates. At 5%, it would be worth $43,000 after 30 years. At 7%, it would be worth $76,000. And at 9%, it would be worth $132,000. So you can see that compounding fairly modest interest rates over a long period of time does give you a real return and a significant return on your investments. And really what Sterling set out to do was to provide those types of investment opportunities to local investors. there was a real gap in the market for the medium to long-term investor who was looking for attractive returns on investments that would preserve the value of their principal and would also involve moderate risk. And what Sterling set out to do by exposing investors to the global marketplace was to provide those investment opportunities. At the time, many individual investors couldn't access global bonds directly because they were mainly available to institutional investors. And very few of our institutional or institutions at the time were offering direct access to global bonds. And as we'll see later on, there are tremendous opportunities out there that we've been able to take advantage of and our investors have benefited from. A key part of our objective and one of the things that we've tried to do over the years is to continuously educate investors about the opportunities that are out there. We've held over 30 educational events and investor briefings and written over 500 articles in the newspaper on investment advice and investment issues and items and considerations that investors should take into account when investing for the medium to long term, especially in the fixed income market. So, without any further ado, I'll turn over to Eugene, who will talk a little bit about the investment opportunities.
Thank you, Charles, and welcome to our audience. So in terms of the lessons that we would have learned over the 20 years being in existence, I also would have shared those lessons with our investors. The first being that, one, there's a place for hard currency investments in one's portfolio. It's the best way to preserve and grow your wealth over time. Secondly, the US dollar being the most liquid international currency is the best option as a hard currency investment currency. And thirdly, bonds, investors should take advantage of bonds in terms of obtaining or achieving their investment objective, that of preserving their wealth over time. Bonds offer a predictable stream of income. They carry less risk than equities, for instance, and they do offer attractive returns, as we have seen over the years. Now, we took a contrarian approach to investing when we began. First, we decided that we would use the US dollar as that hard currency investment. We would encourage our investors to look to the global market rather than the local market for investment options. The global market was much larger than the local bond market, for instance. It offers numerous options as a result of that. It had very active secondary markets, which makes liquidity greater for investors, and it also allows them ease of achieving portfolio diversification. And just to continue on, the global bonds over the years, we have seen tremendous returns being achieved for investors. The slide pretty much captures some of that. Investors have been able to achieve tremendous returns amidst crises, for instance. Now, in 2008, 2009, during the financial crisis, investments, we offered investors the opportunity to earn rates as high as 35% on an AIG bond, which was a high-quality bond at the time. In 2012, 2014, during the depths of the European debt crisis, investors were able to achieve returns or gains within the region of 20 to 30% by taking advantage of European bank bonds. And more recently, in the height of the COVID pandemic last year, and we advertised rates on our products to investors in the region of 17%. So clearly you can see that investments in bonds do deliver very attractive return. However, it's not only during crises that investors have been able to benefit from investing in bonds. Sterling has been delivering exceptional returns to their clients over the 17-year history, 20-year history, forgive me. Take our mutual fund, for instance, which began in 2003 and has delivered exceptional returns since then. For instance, 10,000 invested in the fund in 2003 when it was established, grew to over 70,000 as at the end of 2020. That actually represents a growth of 7-folds. And if you actually put that in more quantitative measure, that actually represents a compound annual growth rate, or CGR, of about 12%, which is very competitive when you consider that the average annual return on the S&P 500 index, for instance, over that same period was only 6%. Right? So bonds do give you the opportunity to earn excellent returns, and many times the returns on those bonds are even greater than the returns that you can get on even riskier investments such as equities. Another lesson, the popularity of bonds increased over time. The repo product became less useful as a means of generating and preserving wealth. That's the Jamaican dollar repo product. A number of things caused that to happen. I'll just highlight two. One, local interest rates on Jamaican dollar investments fell tremendously. If you recall in Charles' presentation earlier, he alluded to the fact that in 2001, interest rates on Jamaican dollar investments were in the neighborhood of 15%. By 2010, they were probably around half of that. And even now, they're even much lower than that. So rates on Jamaican dollar assets fell significantly over time. The repo product was also being, for want of a better word, being outsourced as meaningful investments. The regulations became a lot more onerous for dealers to continue to operate repos. These were conditions which were tied to the IMF agreement when we rekindled that relationship in 2010. And so by virtue of the regulations increasing, and it became a lot more constraining for dealers to continue to offer the repo product, they scaled back on that particular product, and some of them even actually quit offering it. That, as I mentioned, paved the way for bonds to come to the fore and fill that gap that was left by the repos. Well, of course, Sterling, being one of the earlier players in the game, would have benefited tremendously from this transition. We, in fact, in conjunction with the Gleaner and the Observer, had already been educating the public about bonds, how they work, and the type of returns that you could get from that. And so that education redounded to our benefit. And we earned our reputation as the US dollar bond experts. All right. I will now turn over to Tonian, who will talk to us a little bit about how Sterling has been giving back and how we will celebrate this current milestone.
Okay. Thank you, Eugene. So again, remember why we're here this morning. We're celebrating our 20th anniversary, and I promised I'd let you know how we're going to be celebrating. Sterling has always given back, but this year being our 20th year, we thought that we'd give back and give even bigger. We're very proud to announce this morning that we have committed to partnering with Crime Stop Jamaica over the next 3 years. We'll be spending over $5 million to support their mission, which is to detect, reduce, and prevent crime through offering a secure avenue for citizens to give information. The reason why we're so passionate about this partnership is because of the strong positive correlation between crime reduction and economic growth. In addition to physical security, reducing crime will have tremendous financial benefits for us all, for individuals, businesses, and the Jamaican economy. It will make Jamaica more attractive for foreign direct investments and tourism. So not only is Sterling interested in your financial security, but we're also interested in protecting your physical security as well. And we realize that the two things go hand in hand. So the next slide just shows some photos of our signing of the contract between Sterling and Crime Stop. And then our next slide shows you some of the CSR activities, organizations, projects, initiatives, etc., that we have supported over the years and will continue to support. But there are far too many to name, but we are especially proud of our commitment to education over the years, providing high school and university scholarships and supporting and sponsoring numerous education initiatives and projects. We are passionate about educating our clients, so you can look forward to our annual investor briefing, which is coming up very soon. And sports fans will know that we sponsor numerous sporting events, particularly golf tournaments. So we're excited to let you know that later this year, we're going to be hosting our own 20th anniversary golf tournament. We look forward to your coverage of and participation in our celebrations. And I'll hand it over to Marion.
Thanks, Tony-Ann. Thanks for the recap. So I'm going to try to bring together a bit of what everyone has spoken about. And I guess we're summarizing what the last 20 years have looked like for Jamaicans and their wealth. Particularly in the early 2000s, Jamaicans who worked very, very hard and lived through the challenges of the 70s and the 90s did not have a good outlet to grow and preserve their wealth. And that was really the purpose. That was really why Sterling was formed. And we became, in 2001, one of the first local institutions to offer US dollar global bonds to the average Jamaican. And subsequent to that, actually, in 2003, we became one of the first indigenous firms to offer a locally managed US dollar mutual fund. And in fact, if for investors, people, the average person that invested $1,000 US dollars in this mutual fund in 2003, that would be worth over $7,100 today, as Eugene mentioned earlier. So that was something we're also very proud of, bringing investing in foreign markets to Jamaica. In 2012, we created Sterling Investments Limited, which is a publicly listed investment fund that was one of the first investment products actually exclusively for pension funds and retirees to help them grow and preserve their wealth. And in fact, early pension funds that invested in Sterling Investments Limited have avoided devaluation of roughly 43%. They also avoided the national debt exchange, and they received extra US dollar income at the depths of the COVID-19 crisis last year, which would have helped their contributors and beneficiaries. So that was something we were very proud of. In 2014, we listed Sterling Investments Limited on the stock exchange. And in 2016, Sterling Investments Limited became the first company, and I think it's still the only company on the Jamaica Stock Exchange, that introduced a dividend reinvestment program and a complementary share purchase program. These are popular programs in the US and in other global developed markets. And Sterling Investments Limited was the first entity to introduce those programs locally. And we were very happy to partner with the Jamaica Stock Exchange, who had the foresight and the vision to allow us to implement these programs. Now, something else that Sterling really prides itself on is research and analytics. And in fact, our investors are very, very astute. They keep us on our toes by asking us very good questions all the time. And in fact, in 2017, Sterling had warned investors and spoken very publicly, actually, advising them to exit Government of Barbados bonds, which were a popular investment vehicle here. I believe it was Eugene that first wrote an article when the Government of Barbados was first downgraded. And as most of you astute journalists will know, in 2018, the government defaulted on their debt. And also in 2018, Sterling was featured in a Bloomberg International News article where we spoke about both the local stock exchange as well as the global markets. So we were very proud of that partnership and exposure. So enough, one more slide on some bragging. And the next slide really just shows our growth over the last 5 years. We tried to make the graph smaller instead of 20 years. Our AUM has grown, assets under management have grown at a rate of about 16% per annum for the last 5 years. They're just over $350 million US as at the end of 2020. And the graph on the right will show you what we're particularly proud of, which are our capital ratios and our efficiency ratios. Sterling maintains one of the lowest efficiency ratios, just over 20% in the industry. And that's a testament to the strength of our team and the efficiency of our business model. And also we maintain one of the highest capital ratios in the industry, which is a function of our sound investment philosophy and strategy. So we're very proud of these achievements, and our clients have been an integral part of that. Now, very importantly, I'm shifting now to look at 2021 and beyond. The environment in 2021 is, if you could think of the polar opposite of an environment in 2001. Low Jamaican dollar interest rates and low US dollar interest rates will create new challenges for investors for the future. So if you remember, in 2001, the Jamaican dollar, US dollar exchange rate was 47.40 to 1. Today it's 150 or maybe more than that, 155 or so to 1 today. Inflation today is 3.8%. Back in 2001, it was 8.5%. The 10-year US government yield is now 1.7%. The 30-day repo, the J-dollar 30-day repo, in 2001 was 14.5%. This year, it's actually 3%. And of course, as Eugene mentioned, the most popular investment product has now become bonds as opposed to repos. And this means interest rates are much lower. It's a lot harder to make money. Investors have to take a lot more risk to get the same income or return that they used to get 20, 10, 5, or even 10 or 15 or even 5 years ago. And what Sterling is now focusing on is trying to incorporate 2 or 3 different elements of its strategy. The first element, in order to help our clients secure their future and preserve their legacies, we want to incorporate a focus on health, estate, and tax planning, which are important components of financial well-being as well, or of our well-being. And we'll be looking to educate investors on those topics and find ways of offering services that are accretive to the lives of our investors. And we're also looking to higher growth vehicles, new investment products, new types of funds, new types of fixed income instruments that still give people equity exposure, but also higher interest rates for different types of risk. So we'll be looking at new products, we'll be looking at new services, and more importantly, we'll be trying to hold the hands of our investors for another 20 years to navigate this different environment. So we've survived high interest rates, we've survived low interest rates, we've survived a series of different crises, and in fact, our investors have made a lot of gains throughout the last 20 years, and we're hoping to continue that for the next 20. And as promised, we're going to give you a sneak peek of our new advertising campaign. So our 20th anniversary advertising campaign was actually the brainchild of our ad agency, Prism Communications, who has been with us since the beginning in 2001. And we're known for our dolphins. We'll be coming and marine-themed ads, and we'll be sharing more throughout the year about why the dolphin, which is a question we get asked quite often. But this new campaign actually focuses on natural and man-made elements that we believe share attributes that are similar, not just to Sterling, but also to our investors that have contributed to our success. So we have flexibility, the flexibility of bamboo, the strength of stone, the durability of stone, the strength of Kevlar, as tough as steel. And we're particularly proud of our new friend, a new member of the Sterling team, Dan, who is the dolphin watermark that you're going to be seeing throughout a lot of our communications. So thank you for being part of our legacy, and we look forward to you all being a part of our future. And we'll now be happy to take your questions, which you can type in the Q&A section of the webinar. And right after the Q&A, we'll ask a question to raffle the $300 Amazon gift certificate.
Don't we have some questions already?
Yes, we do. We do have questions, Charles. You're so on top of it. Just give me one moment.
Well, while you're sifting through the questions, Marion, I do remember there's one that came in before, and we promised them that we would address it. They had asked about the criteria for opening an account with Sterling. So I just want to say, if anybody is interested in opening an account with Sterling, it's probably best to contact one of our financial advisors directly, and we would work with you to determine what product or products would best help you to meet your investment objectives. And then based on that, we'll guide you in terms of what the criteria and documents required are, because it does vary slightly depending on the product. And so, but other than that, the regular stuff that would be required in terms of the know your customer requirements, so, the usual photo ID, proof of address, and of course there are anti-money laundering requirements, so you'll need to provide things like evidence of source of funds. So hopefully that answers that question, and we should have some other questions to address.
Thanks, Tony-Ann. So another question, much harder to answer. Sterling Asset Management builds a reputation for finding double-digit returns on US dollar securities in the past. What is happening now? Charles or Eugene, or?
Okay, well, what I would say is a couple of things. The mutual fund, as we showed earlier, has delivered 12% per annum over 16 years. That's or 17 years. I would say that's a double-digit return. And as you pointed out, or as Eugene pointed out, as late as last year, in the height of the crisis, we identified securities that have offered returns of up to 17%. We have to work a little bit harder these days, but it is possible to identify those opportunities. And we certainly are still looking out for them and still finding them here and there. So, yes, the days of getting 10% on a Government of Jamaica global bond or 35% on an AIG bond, those opportunities are certainly not around anymore. But it is possible to get double-digit returns at the right time and in the right security.
That's a good answer, Charles. I would just add to that I think, it's important to remember that these things are being assessed over a very long period of time, so over many years. So double digits are more likely to happen over the longer term versus the short term. It's gotten harder to get double-digit returns necessarily on the year, but the longer you hold your investments and the more you compound your interest, the more you allow compound interest to work for you, the more likely you are to get closer to that double-digit return.
What I would also say, Marion, is that very often those sorts of opportunities in today's market come up in very short bursts. One of the things that we found last year was that we were able to get structured notes with very high coupons in the low double digits, 10, 12, 13%, even a little bit more at times. But those opportunities are available for a very short period of time, and you have to be prepared to pull the trigger, at very short notice. You also have to have an idea as to when those opportunities are available, or when the risks associated with them are within your range of tolerance. Because it's always possible to find a double-digit yielding security somewhere. But it may not be the sort of security that you want to invest in.
Exactly.
because the possibility of losing money is also quite great.
Thanks for that, Charles. Otonian, were you saying something?
Yes, I was just going to say that. So as Charles mentioned, those opportunities are very fleeting sometimes. So with those structured notes, what we did, we've started educating our customers in advance so that when the opportunities do come up, they're actually able to make a quick decision. So as we had said before and many times, we're very big on customer education and giving our clients opportunities. And as Charles mentioned, again, we always want to remind people that high risk is usually associated with a higher return, so you need to be wary when you see high risk investments and make sure that you understand what it is you're getting into.
Very good response. And on that topic, a question maybe for Eugene. Someone is asking, are there threats of another Barbados on the horizon?
I probably have to dust off my crystal ball, but I mean, there are always issues of securities who are on the verge of default. Usually things tend to develop over time. I mean, so if you're very watchful and you see the pattern and trend, you pretty much can, make a decent call in terms of whether or not this issue is going to run into problems and perhaps face default. So the threats are always on the horizon. What we usually find also is that market turmoil tends to aggravate that situation, and so it's always good to be aware of the securities that you're buying. As a good start, we always recommend that investors buy securities which are rated. For one, a lot more information is available on them, and you can get financials, etc., etc. And you can also see a ratings history of that particular issue, which kind of allows you to determine, perhaps the trend of that particular credit. So looking at securities which are rated is always a good first step to invest in.
Okay. And I guess a bit of a follow-on to that, Eugene, because you mentioned, market, when the market becomes more volatile or uncertain, that's a trigger. So someone is asking, how does the prospect of a bigger spending administration in the U.S. potentially affect the bond markets?
Okay. Well, that can work two ways. Well, firstly, the prospect and realization of bigger spend has actually helped the bond market initially. What it brought, or what it meant, that a lot more wealth was being placed in the hands of investors through literally money is being given to them, and so they had a lot more money to spend. There was a lot more demand for investments, and with increased demand, it meant that would boost bond prices. Certainly not all bond prices, but certainly the better the quality bonds, the greater the response to that bond price would have been. And so invariably, bond prices would have benefited from an infusion of additional liquidity into the system. Now, the challenge with that, as some investors are perhaps thinking, is that more liquidity in the system is perhaps going to encourage more inflation, and as a result of higher inflation, then interest rates need to be adjusted to reflect that reality. And that's kind of the fear of investors right now. Having said that, inflation in the U.S., though rising, remains at very low levels. The Fed, over the past 20 years or so, has been struggling to get inflation, or to keep inflation at its targeted 2% range. And they have basically, they currently are not expressing any significant concern towards inflation. So pretty much the Feds have injected quite a lot of liquidity in the system, and they plan to continue to do so until the recovery in the U.S. is fully well entrenched, and they see that lasting for some time. So with the Fed basically keeping interest rates fairly low for at least another couple of years, and inflation not running away, these will continue to redound to the benefit of bonds. So, the injection of those stimulus certainly have been helping bonds at the present time, and I suspect that will happen for another couple of years unless inflation gets out of control, which is unlikely at this point.
Yes. Well, that's helpful, Eugene. Thank you, because there's definitely sometimes this thesis that, all the spending, the inflation, what will happen to bonds. But as you mentioned, we've managed money across both types of environments, and we look forward to the opportunities that come up in both.
Sure.
So I think we have time for one last question, and someone is asking, what new products will Sterling offer to ensure that their clients will continue to benefit from the investment opportunities in the post-COVID world? I can try to take a stab at that to start, but certainly what I would say is, while we're not able to disclose very great details right now, as you know, we're a regulated entity, what I would say is that our products are aiming to do two things. One, we're aiming to help people who are saving towards a bigger goal. So for instance, individuals that young families that may have young children and are looking to save or to invest in something that's going to give them a good return for their kids' college education, for example, or the purchase of a home, or even more importantly, their retirement. So giving people viable long-term investment solutions to maximize their wealth and accumulate income and grow and enhance the value of that over the medium to long term. And I would say that's probably where we will be focusing, creating value in that particular area: wealth maximizers, retirement builders, tools that allow people to achieve their goals. And I think, does anyone else have anything to add to that?
I suppose I would just add, Maren, that, some of the products that we currently offer are still delivering very attractive returns for investors. You mentioned the mutual fund. Charles also mentioned the structured notes. So there are currently two products which are achieving that objective as well.
Thank you for reminding me of that, Eugene. Thank you. There are constantly opportunities arising, and we're constantly sharing those opportunities with our investors. And I think that's all we have time for today. So we will move to the very exciting part of the presentation. And I would like everyone to just get their chat feature ready, because how we're going to do this, we figured the easiest way would be to have everyone send an answer into the chat. And the first person to answer the question that we're going to ask correctly will win an Amazon gift certificate valued at $300 US. So I am going to ask the team to put the question up on the screen. First person to type the answer into the chat wins. There's no auditor here to oversee the process. I'm just going to say who comes up on the chat screen and take a screenshot of it first. And we have the question up on the screen. What was the U.S. government yield percentage in 2001? So that was actually pretty early on in the presentation.
Can the panelists participate, Maren?
The panelists cannot participate, Eugene. I'm not an auditor, but I know that much. That's a good question. So we're asking, what was the in our presentation, we had a slide. Oh, no, sorry. Okay, we got one answer, but it's not correct. Someone said 10%. I wish it was 10%. I wish it was 10%, but unfortunately, it was not. And it was not. So 10%, 8%, those sound like U.S. government of Jamaica, U.S. dollar yields. But we've gotten a correct answer from Mr. Leo Campbell. He gave us, he's not quite correct. I'll have to check with my, no, someone beat him to it, I'm sorry. So someone said 5.5, but the answer was really 5.05, and someone did type 5.05 right after. So I have screenshotted it for verification. purposes. And we really want to thank everybody for participating. Miss Cherise Bruce Douglas, thank you so much. You answered the right answer. And we'll be in touch with you. I think we have your email and registration info, so we'll definitely be following up with you. But we really wanted to thank everybody for participating and for coming. And we hope you either learned something new about Jamaica's economic story, and we're very grateful for your time. So thank you, and we hope to see more of you later in the year.